Good afternoon everyone, and a warm welcome to you all, and thanks very much for joining us on our webinar today. My name's Carol Flockert and I'm a partner with Chiene Tait, and I'm joined today by Neil Cameron, who is our payroll manager here.
Good afternoon.
Now we aim to take around 45 minutes today in total for the whole webinar. Now we've got quite a lot of material both Neil and myself, and hopefully we'll have questions from you all throughout the session, and what we'll do is also have questions right at the end as well. Now before we get started into things, I would just like to take you through a few housekeeping points. And if you want to ask a question, is please put them in the dialogue box, which you will have on your screen, and you'll see there on the slide on the right hand side a picture of what that dialogue box looks like. As we go through the webinar, please do submit your questions and your comments, and we'll either take those points as we go through or we'll take them at the end. Now, if you can't hear us clearly, please also do let us know. So through, you'll see at the top of your screen a picture of a figure, a white figure with their arm raised. If you go onto that, you'll see that there's various options there. So for example, you'll see the option for speak more loudly or to speak softer. So you can also signal us in that way as well. Now if you are still having issues, I'd just like to now say a few words about Neil and myself. Now, as I said, I'm a partner here at Chiene Tait, and I've been with the firm for 18 years. What I do here is I oversee the business support department, and what we are doing is providing an outsourced finance function for our clients. So effectively, we're acting as finance controller or finance director for some of our clients who don't have that. Payroll manager here at Chiene Tait and has been with us for 5 years. Now, prior to joining Chiene Tait, he's got a further 15 years experience in payroll, and that comes from bureaus such as ourselves, and he's also worked in businesses where he's prepared the payroll in-house. So that's Neil and myself. Now, today then, what we want to do is talk to you about real-time information. And the title of our session today is The Story So Far. What we really aim to do today is to give you a very brief reminder about the RTI requirements, and we'll also have a quick look at what parts of the payroll process have changed. Where we want to devote most of our time, though, is on focusing on giving you practical tips on dealing with RTI from our experiences. Part of this will also cover then discussion about payroll processes. What we really would like today is for you all to take It would be absolutely great to hear from you all as well. So as I said, if you have comments as we go through, just let us know. If you don't manage to take down all the detail of the tips that we're covering as well, please don't worry about that, because we will, after the webinar, send you a tip sheet which summarises our practical points, because I know we're really covering quite a lot of ground today. Firstly then, a quick reminder of where we are at the moment with RTI. Well, at the moment, all employers with less than 5,000 employees started to report to HMRC in real time from April this year. And the aim there really is to ensure that all employers are reporting in real time before the universal credit system is introduced in October. I'm sorry, you may have noticed there's a wee bit of traffic noise that we've got outside. It's just outside the room that we're in at the moment, so hopefully you can still hear us okay. Now, let's have a refresher on the all-important RTI requirements. So what you have then is when an employee is paid, the net pay will go off to employees as normal. And at that same time, RTI data in the form of a full payment submission, or an FPS, will also be sent to HMRC. This full payment submission will include the employee's personal details, as well as an indication of contractual hours and details of the salary that they are getting paid in that pay period. What you'll have then is employers making numerous RTI submissions depending on the frequency that the payroll is processed. As well as this, there's also the ability to report one-off and irregular payments to HMRC. This is where you will have things like casual labour being reported. Now, should you be making a payment of so-called casual labour out with the normal pay date, this must be reported to HMRC within 7 days of the payment date, or with the regular full payment submission, whichever of those is earlier.
Yes, the payments that Carol has just been talking about regarding casual labour could be classed as a payment made to an employee who is engaged for 1 day. So, as an example of this, this could be on an estate where someone is engaged to work for 1 day to be a beater at a shoot, for example, or also at an event, a one-off event. And these payments shouldn't be confused with part-time staff and also staff who are paid on a regular basis.
Thanks, Neil. We just wanted to flag up there the change with casual labour, because this is an important area that has changed from your old payroll process. Now, I'm now actually going to hand over to Neil, who's going to cover now what's actually changed in the payroll process, and then he's going to move on to talk about our experiences and those tips that I referred to.
Okay, thanks, Carol. To start off this section of the webinar, I'll recap on the areas of the payroll process that have changed due to the introduction of real-time information. I'm sure everyone will be familiar with the full payment submission, and this is a submission that is most common that will be sent off to HMRC. This is due to be with HMRC on or before each payment date. Now, there is the relaxation that is in place, and we'll speak about this later in the webinar. The full payment submission includes starter information. So this is P45 forms, P45 being the form that's provided by an employee from the previous employer, and also the starter declaration, which was also the previous P46 form. And with these forms, P45 and starter declaration being included in the full payment submission, this removes the previous in-year filing requirement. Additionally, leaver information is also included in the full payment submission, and this also removes the previous in-year filing obligation. Now, the second most common RTI submission to HMRC will be the employer payment summary. And this is used to report any recovery of statutory payments such as statutory maternity pay, statutory sick pay. And the employer payment summary can also be used to advise HMRC that no payroll payments have been made, meaning no payment to employees. And I will talk further about the employer payment summary later in the webinar. Now, information is provided to HMRC as we move through the tax year. So HMRC will be aware of what the employer's liability for PAYE and NICs are as we move through the tax year. And because we're providing information to HMRC as we go through the tax year, there is now no requirement for an employer annual return form, the P35. Now, a point to note here is that in your final full payment submission, the previous P35 checklist and P11D statement, which would be on the employer annual return, is actually included in your final full payment submission. So this might be something that you need to think about just ahead of next 5th of April. In connection with P11D forms, you may need to check ahead to see if there's actually any P11D forms due to ensure that this will not hold up the submission of your final full payment submission.
Now what we'd like to do now then is ask you all to take part in the first of our 2 polls that we've got today. What we're looking for here is to gain your views on how you found the change to RTI. And you'll see we're just about to put on screen the question. So you'll see there's the question and there are 4 possible answers that we've said. So you might have found it all quite straightforward. Maybe it's been an absolute nightmare or just some of it is quite challenging. So as you see, there are your options. It would be great if you could just take a few moments to select your answer. What we'll do is we'll come back to the results of our poll at the end of our session just before we take your questions. Please, as well as answering one of the options there, it would be great if you could drop us a note in the Q&A dialogue box just to expand and tell us a bit more about your experiences. So as I say, we'll come back to that poll results later on. And Neil's now about to move on to quite a lot of technical information. As I said at the outset, we will be sending to you after the webinar a note of our tips that we've covered today, so in case you don't perhaps take down everything that we're covering. Back to Neil then.
Thanks, Carol. I'll talk now through the Chiene Tait experience on the change to RTI and pick up on some of the issues that we have encountered en route. Now, due to an issue with the HMRC basic PYE tools and limitations to commercial payroll software, the availability of the earlier year update reporting function was not made available by HMRC until 30th of May. And this was when HMRC released updated version of their software. Therefore, if you have anything to report using the earlier year update, this must be completed now to avoid any penalties that will accrue. Now, the deadline for submitting the earlier year update was actually last week. It was the 13th of June, and that was the deadline to avoid any penalties that HMRC would levy. So, if you do have anything to report using the earlier year update, that really needs to be done now to avoid any further penalties that will accrue. Starter declarations and the procedures surrounding starter declarations has provided confusion for some employers. A point to note here is that all starters need to complete a starter declaration even if they can provide a P45 required is collected efficiently for new employees. We've also adapted the form to include a section for indication of normal also incorporated the statements that are included in the starter checklist in the new employee form. So this eliminates the need for an employee who joins without a P45 form to actually complete a separate starter declaration. You can include all that information in a single form, and you would store that on record in case HMRC would like to view that at any point. Form P46, as I mentioned earlier, is of course no longer in use. Form P38S, the student declaration, has also been withdrawn from use. So when a student worker joins your payroll, they are in effect processed in the same way as any other employee. The starter declaration should also be followed for student workers. And this really simplifies the procedure and is a positive change for the payroll department. Now, the student will not pay income tax until their earnings reach the earnings threshold, currently £9,440 on a cumulative annual basis. So really this will do the same as the P38S procedure, providing that the student is earning below this threshold. It is advisable to check that if you have any students working with you in the current tax year that also worked in the previous tax year, the year ended 5th of April 2013, that these employees or students have moved tax code. So that would be moving from NT tax code that was in operation last tax year to ensure that the tax code has changed to 944L in this current tax year. Now, if any leavers change their mind or mistakes are made after the full payment submission, now this may be, for example, on a weekly payroll where an employee employment record and do not enter a new start date. However, if an employer has given the employee a P45 form, the employer must treat the employee as a new starter with a different record. So just to recap on that, if you have given the employee a P45 form and they come back to work with you, they don't actually leave, you must actually set them up as a new employee. If you haven't actually given them the P45 form, you can continue to use the same employee record. As regards errors and corrections, now if there has been a mistake in the RTI reporting to HMRC in relation with an employee's personal details, such as their date of birth or name, the employer is actually required to contact the HMRC employer helpline. At that point, the employer must then use the corrected details, and we will provide the HMRC employer helpline telephone number with the information that we will send to you at the end of the webinar. Now, if an employee's personal details have changed, such as their address or surname due to marriage or divorce, employers should advise their employees to contact HMRC with the change. And HMRC do provide an online facility to enable taxpayers to do this. And again, we'll provide you a link to the HMRC website with the information after the webinar. So employers are being encouraged to advise employees to change their personal information that's held at HMRC. The employer payment summary. Now, for tax year ending 5th of April 2014, at least the current tax year, HMRC have not built in an automated calculation of statutory payment recovery or compensation within the full payment submission report. So the full payment submission actually reports the amounts paid to employees, including the statutory payments, for example, maternity pay, statutory sick pay, or paternity pay. Therefore, the values that are due to be recovered, along with the compensation, must be advised to HMRC using the employer payment summary. Now, that can be done either using the basic PYE tools, which accepts an employer payment summary for any size employer, or through your commercial software. Now, the employer payment summary can be sent to HMRC for any size employer. However, the full payment submission can only be submitted via the basic PYE tools for employers with 9 or less employees.
Now we're still on our section about Chiene Tait experience, but we've put up on screen there a warning slide, because at this point we would just like to say a few more words about employer payments. Now, Neil earlier on had said that, as you know now, under RTI, we're reporting information to HMRC as we go through the year. Previously, at no point under the old system during the tax year did HMRC know anything about employers' liability for pay-as-you-earn or NIC contributions. So actually, under the old system, it was possible to delay payment of those liabilities without HMRC being aware that you were in actual fact in arrears. RTI does change all this because HMRC are now aware when you're in arrears and will know exactly how much your liability is each month. It is even more crucial then for you to actually speak to HMRC at an early stage to discuss payment plans. You want to do that essentially before you're actually late with payment, before you're in an arrears position. Now, we've actually had experience of contact from HMRC on one of our clients just quite recently on this, didn't we, Neil?
Yeah, that's right. A client received a telephone call from HMRC, and basically HMRC were querying why the payment of PYE and NIC that was made to the HMRC accounts office didn't match with the PYE and NIC that was reported on the employer's full payment submission. And the reason for that was that the business had statutory maternity pay to be recovered. However, an employer payment summary had not been sent to HMRC and received to report the recovery due and the subsequent adjustment to the PYE and NIC due from the full payment submission. So it is important that employers remember to submit the employer payment summary values reported on the full payment submission. So as Carol has said, it is important that if an employer for any reason is not paying the full liability, they speak with HMRC beforehand to avoid any issues. We actually do have on our website a calendar which provides some guidance on the various reporting dates throughout the year, and that's available on our website.
Thanks, Neil. We just wanted to make sure everybody was aware of that because it really is an important area for all employers.
Okay, let's move on to some practical tips on dealing with RTI. Now, most employers will have completed their alignment submission with HMRC. However, it is important that employers continue to provide accurate and complete data to HMRC, especially for new starters. Providing HMRC with accurate information protects entitlement to certain benefits for employees and also state pension. Remember that the data you send to HMRC in the RTI submissions it will result in the wrong information coming out. Employers must ensure that the name, address, date of birth, national insurance number and gender are correct. Information is needed on how many hours an employee normally works in a week, and this is going to assist with the accurate assessment of working tax credits. Now, the benefits to the employer of reporting accurate and complete information will be that employees do pay the correct tax and national insurance contributions. It will be easier for HMRC to match the information provided by employers with the information held on their own system. And it will also reduce the number of employee-related queries that an employer may receive from HMRC. Universal credit is being phased in from October 2013, and universal credit will replace the current benefit system. A pilot for universal credit started in the Manchester area in April of this year, although 3 out of the 4 pilots have been postponed until July. Universal credit will start taking new claims from unemployed people in October 2013. For people in work, this process will begin in April 2014. The remainder of current claims will be moved to universal credit from 2014.
RTI and universal credits is an important one, and one I think that's worth stressing, because information will flow via the employer into RTI, to HMRC, and then will feed into the universal credit process. So it does make it more important to ensure that accurate information is being provided by the employer. I imagine what we're going to find going forward is that there's a real possibility that employees would then be directing queries to their employer about their benefit level.
Yes, universal credit will eventually replace benefits such as tax credit, both child tax credit and working tax credit, job seekers allowance, income related employment and support allowance, and income support and housing benefits. So it is really going to affect many people, and it is important that the information supplied to HMRC via employers, via RTI is correct. RTI. HMRC are asking businesses to include, when relevant, their corporation tax reference or self-assessment unique tax reference on each of their full payment submissions. As I mentioned earlier in the webinar, taxpayers are being encouraged to inform HMRC of a change in their personal details using the online facility. So when you receive a change of address from an employee, it may be a suggestion to remind the employee that the change also needs to be advised to HMRC by the individual. And also where a PYE reference is in existence, so you have an active PYE reference, this could be when a PYE reference is required to allow P11D forms to be completed and submitted to HMRC, although there is not actually any salary or wage payment being processed through the payroll. The employer still needs to report a nil liability of PYE and national insurance to HMRC Accounts Office, but the employer must also submit an employer payment summary to HMRC. The employer payment summary can be set to advise of no payments to employees up to a forward date of 6 months, and the employer must then remember to send an employer payment summary for the remaining months of the tax year.
Okay, well, we'd now like to move on to our second poll, and we'd like to do this one as a snap poll. So we're going to, as you see, there's the question that we're asking. How have you found working with HMRC on RTI? So you may think it was good, bad, or perhaps there's a mixed view on that. So if you wouldn't mind please putting up your answers, and then we're just going to straight away look at the results now. So far we're saying that 60% of people at the minute have got a good relationship or have found it quite good working with HMRC, and the rest of those listening who've answered the poll have got a mixed view. Actually, yep, things are just moving again, and it's more on the good. HMRC. Neil, our experience is really that it's been quite mixed, isn't it, in terms of what has come out from HMRC and how well they're communicating changes and things?
Yeah, it has really been a middle road. There has been information that HMRC have provided that has been complete and easy to understand. However, on the other hand, there has been communication received that has been quite difficult to understand, and the relaxation of the rules for smaller businesses is an example of that we will talk about in a few minutes' time.
What we're found as well is some of the announcements are really quite late. You know, actually, we ideally would have liked the information much sooner, but the HMRC seem to be playing catch up with things. So thanks very much on that. As I say, it's good to hear your views on HMRC and the responses there. So what we'll do is we've still got the results of the first poll to come, and we'll do that just in a few moments' time.
Thanks, Carol. Let's just look at the payroll process before we go on and talk about the relaxation of the rules for small businesses. HMRC have indicated that they will flag an employee as a leaver on their records if they do not receive a full payment submission in a 13-week period. So if an employee will not be paid in a 13-week period, the irregular employee's flag should be indicated on the full payment submission via your payroll software. So this would involve employees who may be paid on a quarterly, half-yearly or annual basis. Also, employees who have completed their 39-week paid maternity leave period but have decided to take the remaining 13 weeks as unpaid leave should be flagged as an irregular employee to ensure that they are not made a On your full payment submission, the actual payment date should be reported, not, for example, the month-end date or the weekend date of the payroll or the payroll cut-off date. If your payment date falls on a non-banking day, for example, over the weekend, the normal payment date should be reported, so that would in effect be the weekend date. As regards incorrect information, remember to contact HMRC Employer Helpline should employee's name or date of birth be incorrect before you actually go ahead and make that change in the payroll. And ensure that new start information is complete of what the procedures are. So this may be, as an example, someone who works in your HR department. So continue to review your employee data and your recruitment and payroll processes. Check the details for your current employees are up to date. Correct any gaps and inaccuracies in the information, and collect information as soon as an employee joins to ensure the payroll process is not held up in any way. And continue to make the use of help available from your software provider, agent or HMRC as the RTI integration continues. In respect of the relaxation arrangements for small employer from October of this year, 5th of October, when it was due to come to an end, it has now been extended until April of next year, and that's to ensure that businesses don't need to change their approach halfway through the tax year. Now, this is the communication from HMRC that may be misleading. The relaxation does not apply to all small businesses, so that would be small businesses with less than 50 employees. What it does apply to is businesses who may only process a payroll once a month, but actually make payments on a more regular basis, for example, weekly payments to their employees. So it may be that an employer does a calculation based on the number of hours an employee has worked in a week, and then gives an advance to the employee surrounding those hours. The payroll is then only processed once a month, with the advance being recovered at that point. This is where this relaxation to the rules applies. it doesn't apply to all businesses with less than 50 employees. Now, there is penalties for as regards late returns for this current tax year 2013-2014, there will be no penalties for late in-year returns. The existing end-of-year penalties will continue to apply. So that means that everything must be in order for all employees by 19th of May. Your final full payment submission must be submitted to HMRC by the 19th of April, and if anything is to change with the information provided by that date, you must send an earlier year update by the 19th of May, which is in line with the previous employer annual return deadline. For inaccurate returns for 2013-14, the penalties will remain unchanged and in line with the existing penalty regime in place. So HMRC will look at that on a case-by-case basis. For 2014 and 15 onwards, details of how automatic penalties will be charged from April 2014 will be announced in due course. So, as a conclusion, continue to maintain your procedures and don't slacken on those procedures. Remember that the importance of the accuracy to them regarding the full payment submission and the payment of PYE and NIC that you make. And in doing this, this will reduce the number of queries you receive from HMRC. And this will also reduce issues for employees in respect of universal credit. Basically, the information that you're providing to HMRC will feed into the universal credit system. So it is important that the information you send is correct, and it will provide employees with accurate and timely payments of universal credit.
Thanks very much, Neil. Before we go on to the final questions and comments that you've got then, we're going to first of all look at the poll results. Now, the question we'd asked was quite simply, how have you found the change to RTI? And we had various options there. Now, you'll see the results coming on screen now, and primarily people have been finding it quite straightforward. 80% have said it's all been straightforward, which is fantastic. And a small proportion of you out there have found some of the parts of RTI to be challenging. Neil, that's probably in line with our experiences of RTI in its introduction, isn't it?
Yeah, we found that the actual submission of data to HMRC was okay. But what we're finding is that there is maybe ongoing one-off issues that we're having to deal with that does pose a problem. For example, a payroll that had to be reprocessed going back to April. How then do you submit the further full payment submissions to HMRC? So it's those type of one-off issues that are cropping up that are providing employers with issues to deal with.
Yes, so it's really more, it's not the system as a whole and the submissions, it's these sort of troubleshooting issues as you come across them, working out how to deal with them.
That's correct, and also making use when needed of the HMRC website and the employer helpline that's provided by HMRC.
Okay, great. Thanks, Neil. Now, we'll now move on to a few questions. I think we've probably got about 5 minutes for questions now. The first question that I've got here, Neil, is in connection with the more common submission, which is the full payment submission. Could you just run through for those listening the differences between those two and when you would actually use a employer payment summary? Because there could be grounds for missing an employer payment summary when you actually need to submit one.
Yeah, the full payment submission is provided to HMRC on each payment date, and that provides HMRC with information surrounding individuals and actual salary and wages paid and year-to-date earnings. The employer payment summary provides HMRC with details of your statutory payments that are due to be recovered, along with any compensation that's due. So it is important that you send the employer payment summary, because what HMRC will do is look at the full payment submission against the actual payment of PYE and NIC that you make via the accounts office, and any difference needs to be reported through the employer payment summary. Another point to remember is that the employer payment summary is also used to advise HMRC when there's actually been no payments made for any reason. So within a payroll, if you've not actually paid anyone in a pay period, or you have an active PYE reference that's used, for example, for P11D purposes, you must remember to report
different area. The second question that I've got here is in connection with starter declarations. Now, again, you mentioned that earlier on in the session today. Now, the question that's come through is regarding the change in process, because I think, again, this is an area of confusion, and it's really looking for clarity on the starter declaration, and is there a need for P46 forms to be completed now?
Yeah, the P46 form is no longer in use. So the starter declaration has replaced the P46 form. You do need a starter declaration for all employees. So all new starts must complete a starter declaration, and that includes employees who have these employees. So a starter declaration for all employees, and in effect the starter declaration can also be used as a P46 form in effect. So you can, rather than use on the HMRC do actually provide a standard starter declaration, and again we can say questions similar to the P46 questions into your new starter form. So really you can pick up all the information that you need for a new employee on a single form.
Okay, thanks, Neil. I think we've got time for just one more question now, and that question is in relation to the relaxation for small businesses, because that's, I think, been reported quite widely out there, both when it was first introduced before RTI came into place, and then, as we said last week, there was an extension to that relaxation. Now, a lot of the press out there that talk about the relaxation haven't really made it clear that it's quite a restricted relaxation. Neil, could you just cover for everybody what this relaxation is?
Yeah, the relaxation does not cover all payrolls with less than 50 employees. It does only cover payrolls where the payroll is only processed once a month, but employers may have difficulty reporting each payment to HMRC. So with the example that I used earlier, it could be that the payroll is processed once a month, but in effect an employer makes payments to employees as we work through the month. If that employer has less than 50 employees, then they would fall under the relaxation rules and can report one full payment submission to HMRC by the 5th of the following month, which in effect is the end of the tax month. So it doesn't apply to all employers with less than 50 employees.
Super, thanks very much, Neil. Now, I think that's us out of time now. Thank you very much for all the questions and comments, for taking part in our poll completion, and for of course, joining us on the webinar today. Please do look out for our updates on our website. Penalties that Neil spoke about, and that relaxation change that was announced last week. If you do think of any other questions, things that we've not covered today, or you're just looking for more clarification, please do drop us an email and you'll see our email addresses there. Now, shortly after the webinar today, we're going to send you a link with the slides that we've used. We'll also send you a copy of the payroll calendar that Neil mentioned. We've got that tip sheet that covers the main practical tips that we've covered, and that will include the HMRC helpline details and web links.